Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 40th COT report in 2014, and as usual we're going to start off with the changes in commercials positions. As you can see, we've got cocoa market on top of our list with a 45% change in commercials positions. You can see the change size over here being much larger than average. I'd say it is actually the largest change what we can see on this 1 year's chart. This is of course a bullish COT change signal. Maybe a bit late. If you look at the chart, we see prices rocketing upwards. So we may be a little bit late with this signal. But anyhow, let's have a look at the COT Extreme situation. That's a little bit bearish if you look at the chart. But it's been like that basically throughout 2014 until now. You can see that we had a significant drop in prices. So this is warning us to be cautious with any major long trade. Obviously, of course, this change signal could affect prices in the near term. So the general picture here is a bit more bearish than bullish. That's what the COT Extreme tells us. Oats is our next market, where we have a 32% change in commercials positions. You can see this change being, again, larger than average. This is, of course, a bearish signal we have. Opening the 5 years chart, let's have a look at the extreme situation. Not really any to talk about. If you look at the chart, we'd be at a bullish extreme if commercials were above or very close or at the zero line. Or of course very bearish if they'd be around 6,000-7,000 contracts net short level, which isn't the case at the moment. So it's really the change signal that may affect prices in the near term. Our next market is the Dow Jones. We have a 25% change over there in commercials positions. This change is definitely not unique. You can see that we have pretty large changes in Dow Jones throughout this 52 weeks range that we can see right now. Let's have a look at the 5 years chart and see how extreme this market is. You can see traders moving away from their bullish extreme levels, and as they do, we can see prices are actually have gone down ever since that bullish extreme we had back over here a few weeks ago. So the extreme, if you look at the chart, is not significant in any direction. It's again a situation where it's really the change that may affect prices. But as you saw it, I don't think that the 25% change would have such a great influence on prices. So really, maybe it's not the Dow Jones that we should be analyzing for any trading opportunities next week. Natural gas, our next market, we have 158 report extreme over there in large speculators positions. We've got 150 in commercials. You can see this on this 5 years chart much better. This is of course a bullish extreme situation that can increase even to greater extreme levels. If you look at the chart back here in 2011, we had an even greater extreme that managed to push prices a bit higher. But eventually we saw this huge decline in prices. So we may get there. If you look at the last occasion we were witnessing such extreme, that was actually a very good buying opportunity, and the previous one wasn't that bad either. So it's a good signal we've got here. Natural gas, something that we should analyze a bit more carefully. But our next market is the soybean oil market, where we have a 127 report extreme. This time we're talking about a more of a bearish extreme, but nothing too large. If you look at the chart, we can gain even or get to even greater extreme levels. What's interesting to see is having this bearish extreme at such price levels. So if you look at the chart, we'd be expecting more of a bullish extreme rather than a bearish one. But of course, it's just a relative one. We may see either the extreme move back towards its bullish side, while the decline in the market is would continue. Or of course, the other scenario may also be the case that this extreme just widens even more prices may stagnate or get a bit higher, and then we would see another down leg in soybean oil. But anyhow, it is an interesting picture we've got here. Not that obvious where the market is going to be headed. Crude oil, our next market, with only a 65 report extreme in large speculators. So it's not a great extreme. If you look at the chart, it's pretty obvious that we had this very large bearish extreme. If you remember, we talked about this back in somewhere in June or July. We had this beautiful bearish extreme, and as you can see, it was a very successful signal. And this bullish extreme level that we've reached right now, in my opinion, is definitely not that strong. This decline may continue. Of course, if you look at the chart, the dynamics of the chart, and the fact that it is a relative bullish extreme, this of course may warn us to against going into any deeper net short positions. If you were considering any. That's going to be all for this week. If you would like to have a look at other COT charts, you can do so at our COT charts page. And of course, if you would like to have a more in-depth and detailed COT analysis, then it's the page that we're looking at that offers you those features. I hope you enjoyed my review, and I hope to see you next week. Have a great weekend. Take care. Bye-bye.